Welcome to Thompson Hill's weekly market breakdown. So I'll be starting my breakdown with GBPAUD. And as we can clearly see on the weekly time frame that the market has been in a downtrend. We can see that because of the series of lower low, lower high, lower low, lower high, lower low, lower high. The market is giving us an impulsive leg to break the most recent low. So that's seen. We go to the daily time frame. Now we could see how the market has also been moving in a downtrend, right? By giving us series of lower lows and lower highs, right? Then we go to the H4. Now on the H4, which happens to be our entry time frame, we could clearly see how market has broken structure to the downside, right? Clearly see that, and we could clearly see this impulsive leg from the high to the low, right? We can see this impulsive leg from the high to the low. Right, this very leg here from the high to the most recent low. Now, and we all believe that after an impulsive move, we expect a retracement. Now we pull out our Fibonacci 2 by starting from the origin of the impulse, the end of the impulse. Right. All right. So we could clearly see that the market came into my point of interest, which is the IR zone. Right. So the market is at my point of interest. Right. And the market has not only gotten to the point of interest, it is reacting to the point of interest. Now, if we go to the lower time frame, that is the H1, and we draw our counter trend line, you could clearly see that the market has broken the counter trend line, right? Has broken the counter trend line. So what am I waiting for to enter this trade? Because this happened on a Friday, so I couldn't hold the trade over the weekend. Now I'm waiting for the market to retrace a little bit up, then I'll be taking it down to this point, right? So that's my analysis for GBPAUD. So I'll be going to the next pair. I'll be going to EURJPY, right? EURJPY. I'll start again from the weekly. Now, without that, we could clearly see that this market is in an uptrend. Clearly. And now we understand that history most of the times repeats itself. Now we could clearly see this candle close, this exact candle formation. Now we have a similar candle formation at this very point. So we anticipate that this very week that we are in, we expect a bullish candle print, right? But then let's go to the lower time frame. Now going to the daily, we could clearly see that the market is giving us series of higher highs and higher low, right? Market giving us series of impulsive move to the upside, the higher low, impulsive move to the upside, the higher low. So now at this very point, we could bring out our Fibonacci retracement tool. Now from the origin of the impulse to the end of the impulse, right? We have that. Now we could draw our area of interest. We could highlight our area of interest, right? So this is our area of interest, and we could see that market got to the area of interest and not just got to the area of interest, it reacted to the area of interest. We could see the market pushing up. So now what do we expect to take this trade? Now we'll go to the H4. So I want to see markets retrace to the downside, right? Probably to the area of interest. Then I'll be taking the buy from this point, right? Taking a buy from this point. So this is my analysis on EURJPY. Let's go to NZDCHF. right? NZDCHF. Start from the weekly time frame. All right. Now, right now, the market is at its extreme point. Is at the extreme point, and we could see rejection to the upside. That the market is rejected to the upside. Prior to this very price level, market has been giving us series of higher highs and lower low. Right. We have the impulse to the downside, the retracement, the impulse to downside, the retracement, the impulse to downside, the retracement, the impulse to downside. Now, the market came and broke structure to the upside, breaking this structure right here, right, breaking the structure here. Right, so we had a break of structure at this very point, right? And after a break of structure, we expect a retracement, which we got. We got the retracement. Let's go to the lower time frame, the daily time frame, right? So we could clearly see the break of structure at this point, right? And we could see the retracement. Now, what do we do again? We bring out our tool, right? Then we highlight our area of interest. Right, so we could clearly see that market got to the area of interest, gave us a double bottom, and is pushing to the upside. So what I'm anticipating for this very week is the impulsive move to the upside, right? The impulsive move. So I'm taking a buy on this particular pair, right? Then we have let me end it with Ethereum, right? I'm anticipating a buy on Ethereum also. I'll be explaining it here, right? All right, so clearly we could clearly see that the market is in an uptrend. We could see the break of structure to the upside. Now we also have this retracement to the downside, and if we go to the daily time frame, we could clearly see that the market is changing from the bearish look to the bullish look, right? Now if we integrate our trend lines to this, we could clearly see that we have a break of the trend line, right? We have a break of the trend line at this point. And not just that, if we pull out our Fibonacci from the most recent origin of the impulse to the end, what did we see? We see price reacting on our Fib level. Right, we see price reacting on our Fib level, on our higher zone, and we anticipate the impulsive move to the upside, right? So these are the trades I'm looking out for this very week. So by the next video, we'll be looking at how this trade played out and getting more trades to make more money from the financial markets. Do have a peaceful week.